Hi, this is Joe Rabil with Rabil Stock Research. So what I want to do today to start the show and the lesson is simplify things, use a swing chart to really identify the key levels where reversals take place. And I want to also talk about, I'm going to use a weekly and a daily together so you can see the differences and how in reality the smaller time frames will actually shift their trend before the longer term time frames. I want to explain that in detail and some of the key patterns that I like to look for. So we'll go through that and then we'll talk about the market and go through the individual symbol requests that came through. Let's go ahead and get going. All right, so I've got the weekly chart of CF Industries on the left and a daily chart of CF Industries on the right. Now, all I'm showing here is the zigzag, and I kept the moving averages on here as a reference point. For those of you who have taken my course, you recognize a lot of the signals will coincide with the signals from the moving averages that I use. So, but I want to simplify this and I want us to just focus on the zigzag. All right, and I just put the volume at the bottom because I don't want anyone to be distracted by other indicators, momentum indicators or anything like that. Let's look at the zigzag the way I have it set up on Stockcharts. And I set this up on any program that I use, but the way the zigzag works on Stockcharts is probably, I think, the best laid out. We want to have it at a 5% auto. Click on, make sure this is auto percentage. I use a multiplier of 2. Now, for anyone who's followed Linda Raschke, she uses a 2.5 for this. We're using the average true range from a low to a high to reverse a move and vice versa. I have found that the 2 works better for catching the majority of the swings, and especially when I start to look at it in terms of the relationship to my moving average setups and stuff like that. The 5, using the 5 with the 2 and using the high to low, make sure that's set up, and then just use close will work fine. All right. And this is I think this is a really good zigzag I've used a lot of different programs, and this is probably my favorite in the way that it's designed. All right. And the way that what I like about it is I can set it up exactly the same. So that was the weekly. Let me just show you the daily. The daily is set exactly the same. I don't have to adjust it. I don't have to use percentages that are different or anything like that. It recognizes the changes. Very smart the way this was put together. All right, so we've got this set up. Now, it's very important to understand that each time frame has its own price structure. Okay, so that means that each time frame is going to also have its own signs of change in trend. So if we start with the daily chart, you can see that we were trending to the downside here, and we make this move down. We make a new low, make a lower high, and then we make a new low again. And then look at what happens. We come back up through this low. So we made a new low, and then we come back up through that bottom, and we make a new high. All right, so we go from a new low to a new high. So that's step 1. That's essentially what we'd call a bull alert. All right, we are in a bull alert category. Now, we had a bull alert here. Even though it didn't make a new low, it made a higher low and then a higher high. So we made a higher high, so that also would be a bull alert. In order to confirm that, we need another higher low. So let's go back here. We made a new low and then a new high. So this peak here, taking out this level right here, is our bull alert. All right. Now, once that happens, we're looking to see if we can make another higher low and another higher high to confirm the reversal, which would be coming back up through here. That would be, essentially a change in trend. But the focus here is on the highs. So we're trying to take out 2 prior peaks when we're turning to the upside. And then if we're turning down, we want to be taking out 2 bottoms, right? Two lower lows. So we make a lower low here and a lower low here, and we confirm the trend to the downside, and then we just get an ABC rally, and then we come back down, and then this is the reversal back to the upside. Now, from that point on, we've made nothing but higher lows. So using this strategy, you wouldn't have been threatened and thought that the trend was really changing yet, right? Because we didn't even take out a swing low at this point. All right, now one of the things I wanted to point out is you can see we make a big move to the downside, and then in order to reverse the trend back to the upside, we just get an ABC. We only get one, and then we come back down, make a lower high. We don't take out this high coming back up, and then we come back and we make a lower low. So we got to start the process all over again, and if you notice, we make a new low and then a new high. We swing low to swing high, and then we make our higher low, higher high, so we know that here the trend on the weekly has changed. So that just took place at the end of the year. The daily chart took place in August, is where it reversed and has been bullish ever since. So where I know what people think is that you want to have a long-term uptrend in place and then play the smaller, play it off the smaller time frames. And I do that as well when I'm playing pullback trades. But when we're looking for reversals, it's going to start from the smaller time frames and then work its way up. It's not going to happen on the big time frame first. It's going to happen on the smaller time frame first. All right, let me give you another example here. So look at this, because there's two patterns that I think we need to be on the lookout for. So this is clearly trending to the upside. We make a new high and then we make a new low right here. We come down, and this is supposedly a continuation to the downside, but notice what happens. It makes a lower high, and then instead of making another lower low, it actually reverses and comes back up here. So this is a failed bear. This is a bear alert here, right here. It's a bear alert, and instead of coming down here and confirming the bear, it turns around and turns back up. So we'd refer to this as a reversal of the potential bear. Right? We were trying to create a bear to the downside, and instead it failed and turned back up to the upside. And then we did have a quick ABC to the downside and then made this monster move. ABCs are not reversal of trends. They're actually opportunities to look for your next buying opportunity. All right. Now, if you notice what's taken place, we actually made a marginal new high here and then came down and took out this low. So we're on a bear alert again. Now the question becomes, do we come back down and make a new low here? Or do we come down, make a higher low, and then turn back up and we get continuation? I think if you understand these basic concepts, this can be incredibly helpful. Let me just do one more thing just to show you here. We had this trend to the downside. We make a higher low, higher high, and then we never take out and really confirm that trend until we get through this area here. We made a pretty steep pullback. It did maybe take it out by a few pennies and then turn back down. But the reality is that we were looking for this to come up through 20 to really get the trend going to the upside. So hopefully using these concepts can help you stay in tune with what the trend is in a very simple manner. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on the services page right now. You can see at the top I've got the advanced trend and momentum courses individually priced for lifetime access, plus you could buy them as a bundle at a discount. And then also the individual package has about 2 to 3 reports each week, plus a special video commentary each week for that package. Also, if you're new to this approach and you want to just learn more about it, you can start with the book I'm offering at a discount right now. My comments are for educational purposes only. Please do your own due diligence before making any investments. So I'm going to start out and talk about what's taken place in terms of a few sectors, but also look at this, the map that Stockcharts has on their ACP. I know they have it across the board, but I'm obviously only use the ACP side. But look at this growth is really kicking into gear again, and it's the thing is that I guess the point I wanted to get across in showing this is that you can see what's taking place on the XLC, which is the growth side of the equation. It's been a leader, which has been showing a lot of strength. There really hasn't been an interruption in the pattern. When you look at it on a relative basis, you look at it in MACD, look at ADX, you've got the momentum, you've got a price chart and a trend that is still in a continuation from the prior year. It's not like we reversed the trend and it's turning back up again. I think this is a continuation from last year. We haven't seen real profit taking from last year's move. So I would be on the watch for, continuation here. Maybe maybe this XLC wants to go up to maybe 110 or something like that, and then go through some kind of a correction, go to a higher high. The one thing that I'm noticing when I look at this and a few of the others in the growth category is that it came right back to the 18 and got a really good reaction. We got our ABC correction, and now it's emerging back up again. I mean, if I look at this from a 2 time frame standpoint, it looks to me like if we can get a little higher low to form, this would be a pretty attractive short-term trading pattern. Even though we're extended, you can play it off the weekly and daily and play for a trade to the upside. So that's something I'm kind of watching. We start to look at something like XLK. It's a little bit different. It had a little bit deeper pullback, but the 18 and the 40 are still rising. We actually created a reverse divergence on the weekly. Now, there's not a lot of trend strength here, all right, on the weekly chart. But if this goes long enough, if this keeps consolidating sideways long enough, you have to start thinking about it. Instead of a failure of ADX confirm, you're almost thinking about it as a low ADX condition setting up for another up move. So it might go ahead and push to another new high. And what that would do is extend this pattern of divergence for now. But again, we could see a little bit of a trading move, especially if this can back off and form a higher low. I think that would be a little bit more attractive. And then if we look at something like XLY, another one that's been a really strong leader as it finished off the year, we haven't seen any real correction. All we've seen is a pullback and a strong trend based on the weekly ADX and the MACD pulling back and forming a pinch. And now we're getting a reversal of the downtrend. We had an ABC correction. You broke the downtrend line. You had a zero line reversal with low ADX. Probably going to see a continuation up here, and probably wants to make another new high potentially. So it's a highly volatile environment. I wouldn't make major bets in this situation, but there's enough good going on with these, and there's not enough of a sign that they're ready to reverse yet, that I think we probably need to be planning on maybe with this climbing to another new high, and do treat it like a trading move. That's how I would handle it anyway. All right, let's switch over, and I do want to look at the QQQ real quick. It came down to the 18. It never broke the 18 in this situation. It gapped down below, and by the end of the week, it was above. Line is still rising. 18 is rising above a 40 week. So the 18 week is climbing, and the 40 week is and they're rising at about the same rate. All right. Now, what I don't like is what's taken place in the ADX, as I've been mentioning. But again, this can prolong for a little bit because we're in a continuation signal from last year. We don't have a true reversal in place yet. There's been if we look at the weekly swing chart, we've made, we made an ABC correction turned up, right, to end 2023, and then we make a higher low, higher low, higher low, higher low. We haven't done anything from a swing chart standpoint on the weekly to signal something that is truly concerning. We're actually getting a fresh RSI buy signal. Now that's coming as a part of a divergence. If you notice, we had a 70 reading here, and we're moved up, and this is not hitting 70. So I don't find this quite as attractive, but it could form a little trading play, again, that carries it a little bit higher. It's showing that the selling strength just isn't that strong right now. All right, look at IWM. This is what bothers me about this, is that this is actually down today with the NASDAQ 100 up huge today. We're actually showing a down move in this for the day. Now, if we can get any strength to show up in this IWM and take out these prior peaks, then I would be a lot more encouraged by what's taking place. Now, I can look at the swing chart and I can see higher low, higher low, higher low, forming another higher low. We're not showing any real problem. The problem we've got is that on a relative basis, it's not keeping pace. And in a good environment, that will not be the case. In a really strong, powerful environment with expansion in the number of stocks participating, typically the IWM will outperform the S&P. All right, let's take a look at this USO, because I don't want to spend a huge amount of time going through the commodities again. I did that last week, but look at this pattern. Look at how this consolidation pattern on the monthly. And the MACD has been hovering above the zero line for a couple years now, and we're trying to get a little bit of an emergence out of this pattern, starting to show signs of buyers showing up. I think if this can make a higher low, almost form like a little handle here, we could be breaking out of a pretty nice little base. So I definitely think it's worth starting to go back through some of these energy stocks. Let's take a look at Netflix. It came out with earnings, very good earnings, obviously, but look at the pattern that has developed. We've got the same thing developing over and over again, which is strong move, confirmed by momentum, all right? And then we get our pullback to a rising 18, which is above a rising 40. I mean, this is classic sort of 2-time frame pattern. And then we get a pullback on the daily chart. Now, the pullback was a little strong, so it's possible that this is going to come back and check back, maybe pull back for a couple days or form a higher low, which is probably what I'd be looking for at this point on the daily chart as the next opportunity. Notice we also turned down at the 1,000 mark. All right, now, because the momentum is so strong, because we're somewhat extended, you have to play this a little tighter. I wouldn't treat this as, oh, this is a new buy and I'm going to hold it for the next 3 years. I would be looking for some kind of a pullback on the monthly if I want to do that. If I want to trade it, I'm looking for a little bit of better entry off the daily chart, which means it's got to come a little bit closer to its 18-day. All right, I got another request as well on this WST. So the answer to the question, how is this trading? I do like what's going on. All right, I mean, there is signs of improvement. We had the big move down and a big move up. And now we've consolidated. I mean, this has just been spending a lot of time inside this big wave here. What we need, and what the good thing that I like is that we broke below this key low from 2023, and we didn't have a lot of follow through, formed a lot of tails, but we need to push through this 18-month. We need the MACD to cross through its signal line. We need green DI to get going here. If we can get that, then I want to start to look for the first pullback on the weekly chart. So I want to see a little bit of strength, a little bit more strength on this time frame to show the ADX is showing a little bit more power, and then I'll buy the next pullback, and then we'd have this in place. So we want this to get in place and this to get in place with momentum, and then buy the first pullback. That's how I would handle it. You can see it's kind of muddled up in here. There's some price resistance. There's the 18-month there. We haven't quite kicked in on a momentum, on a RS basis, and we haven't quite kicked in on a momentum basis. All right. All right. Look at EOG. This is a stock. So the rule I like to use is if a group has been hit, right, and has been oversold, and it's starting to turn up from oversold, which is what's happening in energy. I want to buy the one that didn't break down. You see how this has actually formed a reverse divergence? Well, that's taking place because this is making higher lows. So I want to buy the one that didn't break down, and I'd love to see this break through this little area here and kind of break out of this consolidation pattern. Now, I'm showing that on a monthly chart. The weekly, what it could do is pause in here and form a little higher low, a little cup or something like that, and then break through 140. And we're starting to see that develop on the daily chart. I think the whole pattern is pretty attractive. Obviously, I'm looking for a little bit more confirmation, but very, very attractive in the way that it's set up. We've also got something developing in healthcare, which, I think this is held up pretty well. It's trying to form another higher low. Notice how we're getting some signs of improvement in the monthly MACD as it turns back above the zero line. But again, getting through 120 is key. Now, it made it through earnings, and they like the earnings. But if we can get through 120, I think it's kind of game on for this stock. Something to watch for that's outside of technology, outside of the growth area. Now, here's one in the growth area that I think is sort of interesting because we had nice move to the upside and a pullback on the 18-month. Now, we don't have a lot of momentum on the monthly at this point. So we're going to need some confirmation. And I think the way I would play this is because there's a lot of price support, and because it looks like it's doing is forming an opposing trend pattern here. I want to see this break through the downtrend line based on the way this is set up with a low ADX condition and a zero line reversal. Let's see this break out. And then what I would do is play it off the daily most likely, or at least wait for the daily to show signs of confirmation, forming a higher low. And then we could play it off the weekly chart based on the way this is sitting on the 18 month. So it's an attractive pattern, something to watch for. Let's look at something like Apple, which, out of the big stocks, this is one of the few that's showing real weakness. And when I say real weakness, I'm saying not only is the price pulling back, it's breaking on a relative basis. See how this is dropping relative to the market? So that's somewhat concerning, but you have to define your time frames, because we're still well above the 18-month line. This is really just right now is defined as a correction in a long-term uptrend. So we could spend time correcting back down into the lower 200s and not break the longer-term trend. But from a short to intermediate term standpoint, this is not the stock they really want to own right now. This is the type of thing that I'd be concerned about starting a new year after a little bit of run to finish last year. So I think we have to be a little bit more careful about buying weakness in this. I think it's going to take a little bit more time. Thanks for watching today. If you have any stock requests, you can send them to stocktalk@stockcharts.com or just put them in the comment area below. Also, if you want to learn more about some of these techniques, you can go to my YouTube channel called Invest Like a Pro. Have a great week, and we'll see you next time.